Hey traders, it's Crystal here with crystaltrading.net. It's about 4:35 here on Central Time. US, we just closed the markets for the day. We're starting up here something new. You're looking at the S&P 500. It was a pretty bullish day for the equity markets, as you can see here. And as I've been talking yesterday in our yesterday's video, we were mentioning and talking about this rejection at the 50%. And the possibility of this market moving higher into this 127. And as you can see, we touched this almost exactly. But what's happening on the 4-hour charts, we have a little bit of a rejection here. So I continue to watch this 127. I think this could be a level where the market could get a little bit sticky. And then once we move back down, obviously this level up here will provide support at about 1600. Everybody's talking about the Dow Jones moving higher and closing above 15,000 in here, and if you're looking at it, it closed about 15,035. And if we're looking at the weekly charts, we do seem to be a little bit overextended in here. We might be in a we're either in a final wave 5 in here, either in a third wave. There is no reason to fight any of this. For right now, you can see clearly how this leg up here, it's pretty strong, it's pretty bullish. We've had this double bar rejection on the weekly charts that was totally ignored by the market, and it didn't do any good. So the fact that we have broke higher shows us that the market is strong still, so we might have a little bit while to go. I'm going to try to just apply some fibs up here and see if we can at least get an idea where the market might have a little bit of a breather in here. We passed the 127, we passed the 16618. I think the next one up is it's 2618, which is, I don't have it in here, but it should be probably somewhere higher, about 15,300 or so. So just be patient with this market, let it develop, and then we'll see once it turns down. It should probably help with more risk averse trades. So that's my view on the equity markets in here. They're continuing to be bullish, so no reason to fight yet. All right, let's look at the currency markets. We have closed our Aussie dollar position last night. The news out of Australia were pretty bearish. The Reserve Bank of Australia cut the rate with the 25 basis points in there, and we broke below these levels in here, and we got out of a trade about 101.60 in here, so we made quite a few pips on that one, which is good. Right now the market is taking a breather in here. I want to show something in here and see how the market moves in waves, and an important tool that you might want to use in your arsenal of trading. It's just trying to measure the legs of the market, and that's pretty well, if you combine that with the Elliott wave and price action, you can get a pretty good indication of where this market might go or where do you want to get out. So if you measure this leg, which was right from, let me just get this pretty right, from 103.82 to about 102.21. I mean, you don't have to be precise, but that's the first leg, and then you copy and paste this one down. You can notice how nice this move pretty much equaled the move this leg up here. So even though we dipped below it, but it was good target. So 101.60, and now the market it's pulling back a little bit here. Watch this level of resistance as the market moves back up higher, 102.24, and that could be a level that the market could be sold into if anything. So on the daily charts, this market looks still bearish. We're attacking the bottom of that trend, like I said, and this is a pretty good important level to watch. Again, 101.60 all the way down to 101.20. So just watch this market. If we drop below these levels, this market could pick up steam and continue to move lower. So keep an eye on the Aussie as a pretty good indicator of signs of risk aversion, of risk appetite to come into the market. So if the Dow Jones continues to climb higher and this Aussie pair doesn't respond and starts moving lower, you pretty much know what to do. So that's with the Aussie. Let's look at the Euro. Actually, let's look at the Euro Yen. It's one of our fresh positions that we just opened a little while ago, and I've been watching this triangle develop for the last few weeks in here. a couple of months, 3 months, I think it's been going on already, right? April, well, actually 2 months, April and May, and it seems that we are in this pretty strong correction, A, B, C, D. So I think we're coming lower in this E move in here, which is probably coming at the bottom of this channel. It's about 128.60, so it's probably another 40, 70 points to go to the downside. You want to see how the market reacts on into this level. If it gives us any indication of any price action rejection from here, we might have a squeeze upwards. But if we could also continue to just make an E leg in here, then squeeze back up higher slowly, and then break lower. As you can see in terms of price action, you can see this double bar rejection up here from this trend line, which is pretty telling that the market wants to reverse a little bit lower. So pay attention on this one. I don't think we're gonna get really aggressive on this pair just yet, but it seems that we might have something going on in here into the euro, into the yen pairs. Right, let's see at the euro dollar. I think we got some interesting developments in there. And so you can also see up here this double bar on the 4-hour charts. We haven't broken below this this support line in here. We gotta have a pretty strong break below, and then if you consider this a head and two shoulders, then the targets could be pretty aggressive to the downside, probably somewhere into 29.30 zone up here, right? Just by looking at the market and measuring this this leg up here. Something equal to that will be a good target to the downside towards 29.30. So just pay attention on that if we break below. I think on the daily charts we're posting a rejection bar in there, and see if that happens or not. We could also be, if you want to look from the other side of the market, we could also be in a consolidation, in an upward flag in here. That could break to the top side as well. So just pay attention on this, and don't get aggressive unless we're really breaking below this trend line. Otherwise, pay attention. The market could quite reverse in here and just move higher. So all right, that's all I've got for today, guys. Hope this helps. I don't think Aussie Kiwi is posting a pretty interesting formation on the daily charts. Is something that if you're interested in trading, you can have a look at that. And let me get this chart up here. Aussie Kiwi. All right, there it is. And I'm just gonna go naked on it and then just go on daily charts, and you can notice after a pretty long steady decline into this pair from the 126 levels, 127 almost, all the way down into the 118. So almost more than 9 figures in here drop into the Aussie Kiwi. The market is finally posting a pretty strong reversal bar in here. You want to pay attention to this. You want to watch. It might take a little bit while for this bottom to develop, for this low to develop, but I think this is a pretty good strong indication that this market might have a little bit of upside built in here. And if you do that, then consider the Aussie will get a little bit stronger, the Kiwi will definitely get weaker, so you might want to trade Kiwi dollar from the short side. That should probably help. All right, and I don't see anything else. Some rejection into the metal markets from the lows in there, and the pound franc has posted a pretty strong reversal bar on the daily chart from what I'm seeing, and I think that's about it. All right, so have a good day out there. If you guys want to contact me on Twitter at Crystal1 or at Crystal Trading, or you can visit our website at crystaltrading.net for more information. All right, have a good day. Bye bye.